You need to stop investing in stocks because of your insider information. Look, I hate to break it to you, but you have no insider information. You don't. You legitimately don't. Anything that you were thinking of has already been priced in. There's nothing, barring some extreme circumstances, maybe you're the literal owner of the company, then yeah, you do have some insider information. But if you're a normal person and you're buying or selling stocks based off your individual experience, it's one thing if you read an article and you think that AI is going to be the future and XYZ company is investing in AI. I would say that's still a little silly, but that is at least a logical thing. You know, you think this industry is going to grow, a company is investing in that industry, and they're first, and they're investing a lot of money. That's fine to a degree. I don't think that's unreasonable. As long as you're educated on AI and you're educated on how long it's going to take to return the investment, that's to some degree fine. More so what I'm speaking on is people that will go into Chipotle and they'll have a good experience. The waitress, or not a waitress, but the cashier will give them extra chicken. And they're like, oh my gosh, this was such a good experience. I felt so welcome here. Look, I hate to break it to you, but you're an idiot. Like legitimately, you are an idiot. Or if you go into an airline and you've got a bad experience and the flight gets delayed, and then you rush to sell your stock of American Airlines because you had a bad personal experience. Give me a break. I mean, listen, your individual analysis of a company, it's completely irrelevant to the stock price. Even if the totality of the customer base doesn't like the company, look, some companies are still profitable. If you were investing in a stock and you don't know their PE ratio, you don't know the EPS ratio, you don't know if the company's even profitable. I mean, if you're legitimately investing any serious money, if you're investing $50, who cares? If you're investing serious money into stocks and you don't even look at their balance sheet to see if they're profitable or how it's trending, you know, some companies aren't going to be profitable for a while. Like Tesla wasn't profitable until COVID, but you could see they were trending in upward direction and then were increasing market share. But you don't even know if the company's profitable and you're buying or selling based on your personal experience, or you talk to some buddies and they all said that McDonald's was dirty, so you're going to sell it. What? Seriously? I mean, it's just completely absurd on its face that people, they get into investing and legitimately, look, first of all, I would talk to a professional. You can also do your own research, obviously, but it's a little more risky because you're susceptible to make some stupid mistakes, like investing off your feelings. But look, at the end of the day, if you're not going to talk to a professional, you probably should just buy an ETF. Buying individual stocks, it's actually crazy. You know, individual stocks, if you look at the totality of the stock market, more than half of stocks on a year-to-year basis go red. And a lot of that is smaller companies going bankrupt. But still, I mean, it's not 50%. I'm pretty sure off the dome, it's close to 70% of companies, their stock price goes down each year. That's insane. So if you were just taking a gamble on a random company, it's more likely you actually lose money. If you buy an ETF, over a 5-year time span, you're pretty much guaranteed to make money. I say pretty much because, you know, anything can happen. I can't predict the future. But if you look at QQQ or SPY, if you look at either of those, the two biggest ETFs, which should be available on really any trading platform, and look at them over a 5-year time span, or just even look at them all time, there's not going to be, if you invest now, there's never going to be a 5-year, obviously you can invest now and the stock market crashes and you lose some money, but if you're investing over a 5-year time span, there's really not going to be a 5-year time horizon where you're going to be losing money. It just doesn't happen. Look, ETFs, the entire market, especially where it's heavily concentrated on the major companies, the vast majority of them make money and they continue to grow. So look, if you're going to be kind of a normie, if you're going to be super uninformed and ignorant, which is fine. Look, a lot of people don't want to waste their time looking at charts and stuff like that. That's fine. I would just do your research on different ETFs and find whichever one has the sectors you like or the specific companies you like. Whatever, you You can get an ETF for Africa, just African companies, or you can get an ETF for just Asian. You can get an ETF for really anything. So I would look into ETFs. Maybe sprinkle some crypto. That's a risky investment, obviously. I personally own crypto, but it's up to you if you think crypto makes sense for you. Maybe gold, some rare earths. That's also a consideration. Real estate, obviously, as well. All those four things you should look at, and based on your own circumstances and what you feel the most confident in, that's probably what you should invest in. But investing in a solo asset, I wouldn't say gold is a solo asset, and I wouldn't say really real estate's a solo asset, because the range of outcomes for both those things are a lot smaller than an individual stock. An individual stock, for the most part, it can go down 100% and it can go up 1,000%. Gold and real estate, I guess technically they could go down 100% or up 1,000, but realistically, real estate's probably going to go up 5 to 10% this year. Gold is probably going to keep up with inflation. So those are things that, if you're not going to be super informed about, those are investments that probably make more sense for the average person if you're just going to YOLO it and throw some money into the market.